Good afternoon. You're watching Businessworld Live. I'm Jess Delos Santos. Let's take a look at how the local bourse closed today, Thursday. Okay, local stocks soared earlier in the session on the back of an upgraded outlook on Philippine equities by Credit Suisse. Shares jumped as much as 1.5%, but pared back those gains by half. But still, ending the day in the green, up 0.7% to 6,834. Credit Suisse upgraded the bourse to overweight due to attractive valuations, low foreign weighting, and strong earnings recovery. And the projections that COVID cases might actually decline faster than expected. In its note, it said that the Philippines is favorable due to its strong structural growth and that it's better positioned to withstand U.S. monetary tightening compared to how it was back in 2013. Talking about positioning strong, one of the day's gainers is Megaworld. The stock is up 0.7% after office leases proved to be resilient, with 415,000 square meters booked since the pandemic started. 60% of those were renewals, while the rest were new leases. But its parent, Alliance Global, doubled those gains. AGI at least is up 1.4% at today's close. Why is that? Well, Andrew Tan just confirmed that AGI, not Megaworld, is proceeding with its planned casino project inside the Boracay New Coast development of Jerry or Global Estate Resorts. In his clarification, Tan said they already have several hotels there and they are building more. He believes the tourism industry in the island will recover fast after the pandemic. This comes after the president himself gave the go signal for casinos to operate once again in the island destination. As you can see in this chart right here, again, AGI, one of our gainers today, up by as much as 1.4%, now at 10 pesos and 40 centavos a piece. But it's not just Tan's Alliance Global that's eyeing casino operation in the island. Leisure and Resorts World has also clarified that they are looking forward to the resumption of their talks with Macau-based Galaxy Entertainment. That's going to be for a $500 million casino resort in Boracay. But the company said they have yet to start formal talks with Galaxy. L&R today, in fact, rose to a 4-month high on the back of those stocks, advancing 7.6% to end the day at 1 peso and 85 centavos a share. Here are other headlines we're keeping our eyes on. The Trade Department has approved price increases for several grocery items. The price adjustment of 20 centavos to 1 peso will cover 76 items, including instant noodles, coffee, and milk. Meanwhile, notice and price adjustments of Noche Buena items will be released by end October or early November. The Trade Department says manufacturers have been appealing for price hikes following higher costs of raw materials and packaging. The Philippines is expected to miss growth targets this year after the government reimposed lockdowns to contain COVID-19 transmission. Macroeconomic think tank GlobalSource Partners says the domestic economy may grow at a pace of 3.5% this year, lower than government target of 4 to 5%. The research house says their less optimistic outlook is based on assumptions that the government will continue to impose periodic lockdowns for the rest of the year. GlobalSource has kept its 2022 forecast for Philippine GDP at 6.5%, still below the government's 7 to 9% goal for next year. Now, Health Secretary Francisco Duque says the country may reach herd immunity by February next year at the earliest. Secretary Duque says this is assuming that the country has enough vaccine supply to administer 500,000 to 600,000 doses per day in the coming months. Achieving herd immunity or the inoculation of at least 70% of the target population is seen as a critical component in the country's recovery. London-based Capital Economics says a resurgence in cases dim prospects for a strong rebound for the Philippines. The government is expecting to receive around 137 million vaccine doses by year-end to ramp up vaccinations nationwide. The national government has earlier said that for 2021, They would aim for population protection or the vaccination of 50 to 60% of the population. While the country waits for herd immunity to be realized, cases continue to surge, driven by the Delta variant. But the European Chamber of Commerce thinks that measures in place here are more successful compared to our neighbors in the region, now making the Philippines an attractive destination for European businesses. Let's find out more from ECCP President Lars Wittig. Good afternoon, Lars.
Good afternoon.
Okay, so cases here in the country still on the rise. That reached new peaks, even breaching 2 million yesterday. Add to that, of course, we have the longest and strictest lockdowns in the world. So it's kind of hard to see as to why you see the Philippines being an attractive location for European businesses. Why is that?
Well, I believe that the government has demonstrated a much higher adaptability and agility in their way of restricting our mobility, and even when it's brought to the ECQ level. Most recently, they said they announced the ECQ for 2 weeks, and immediately thereafter, to everybody's surprise actually, because historically they haven't demonstrated the same flexibility, then it was eased to MECQ. You might not think there's much of a difference, but for the businesses, for us business people, it really allows us to breathe a lot easier when it goes from ECQ to MECQ. So much more adaptable.
Mm-hmm. But give us an idea, how are European businesses doing here in the country so far since the pandemic started?
Yeah, since the pandemic started, I would say that the level of foreign direct investments from Europe and in general actually has proven quite robust. Looking at the numbers from all of 2020, the foreign direct investments were down about 24% in average, but that was to a level of 6.5 billion. That's a very healthy number. 2-3 years ago, that would have been an excellent year. And when we look at specifically the foreign direct investors from the European countries, it was only down 12%. So I believe that has demonstrated a high degree of robust business, sustainable business.
Mm-hmm. Now, give us an idea as well. I mean, of course, it goes without saying that a number of businesses from Europe here in the country, those already located here, a number of them, I would assume, also closed shop.
Well, everybody have been challenged, regardless whether it is Filipino businesses or European companies alike. Us, maybe the European businesses only a little bit more in the sense that not being able to bring in, to travel into the country the same way as we used to. And therefore, it's a little bit difficult to further your investments, expand on investments, when you cannot get your people in and at least participate on the bridge for the movement forward.
Now, for those businesses which had to close or shut down during since the pandemic started, can you give us an idea as to which sectors are these from?
Yeah, well, overall, I would say that there are 0 businesses that have closed down because of COVID-19. But there's no doubt that there are some that were going to close anyway, and then perhaps they did it sooner rather than later. But it would have happened within months, if not just within a few years. And it's very limited what we have seen, and it's difficult to point at some specific industries, because I don't like to do so, because then those industries will maybe raise eyebrows and feel that it is unjust. But it is typically just a type of maybe manufacturing where we see more and more outsourcing outside the Philippines, even by Philippine companies. So it has only been natural movements. With that said, what we just would like to do when we look forward, which we should, that is to see more, bigger and better. And the European businesses are quite bullish on the region, on ASEAN, and specifically about the Philippines also. But we need to further the environment, groom it so that it's more enticing. The investments will come, but how much and how fast, We need to get the right type of investments. The industries right now that are barely here because they're not allowed to. It's restricted. It can be telco, transportation, and similar. So those laws that are currently in the works should be approved before election starts to absolutely take over. And here, of course, I think about the Public Service Act and the Retail Trade Liberalization. Excuse me, and of course the third one, not least, Foreign Investment Act.
Mhm. Now, you mentioned there's still high interest for these investors to enter the country. Can you at least nuance that for us and give us an idea which sectors are seeing this high level of interest?
Well, those that are already here and proving very, very robust, that is everything from services. I mean, we all know Lufthansa are servicing multiple airlines from the year. It is food and beverage, and it is BPO. They're all doing very strong, and I have no impressions or input indicating that it should be anything less, only more looking forward. But again, think about all the high knowledge, high value jobs that would be enabled if we allow for telco companies to come in and operate, which they cannot do now, at least not with they can only do with maximum 40% share ownership, which means they invest, but they don't really manage and control it. And the same even with retail. We want to have more products on the shelves, so more choices and at better prices. And what I just saw in your news earlier, prices are going up in the retail stores. It is a global trend, but it does not help either that logistics in the Philippines, again, are restricted to domestic players only for domestic transportation.
Now, you mentioned earlier there are a number of measures that have to be passed in order to encourage more foreign investments. You're talking about retail trade, liberalization, public services, and even foreign ownership. Question is, at the same time, one more concern is a country's growth trajectory that is expected to at least take a long time before we recover to pre-pandemic levels. Is this in any way going to be a holdup as well for European investors?
No, because when you look at European investors, the way that they look at ASEAN compared to the rest of the world, there's not one single region that is as enticing. And research shows there's not one single region that investors from Europe are gravitating towards more than ASEAN. ASEAN is clearly the number one. And here we have a fantastic window of opportunity right now to get further ahead of the pack. And we only get ahead of the pack, meaning the other ASEAN countries, by passing those bills that I just mentioned before.
Now, which among our neighbors in the region do you think is our toughest competition?
Well, everybody are presenting competition in different ways. But where I feel that we are really standing out is we have been showing very sustainable growth for many years, and it's a very stable environment here for investors. When you look at the labor markets, it's often overlooked because we never see a crisis, then it doesn't hit the news, right? But when have we last seen major strikes? Also pre-COVID, I don't recall any. I lived here in the early 90s. There were strikes all the time. And then also the political system is actually very stable. We saw last month that the government in Malaysia stepped down, and since they are still on hard lockdown, they can't have a new referendum election. So it is the king, the sultan, who is now deciding who governs that country. People take to the streets in Thailand. Actually, if you take all of 2020, foreign direct investments into Malaysia and Thailand combined were less than those into the Philippines. And that speaks for itself. And in that regard, absolutely, I mean, that's a very good case to present to future investors also. We just have to make sure that we are not preventing them from entering, especially in those new, more high-tech industries, such as, for example, telco.
All right, quite a bullish outlook for the Philippines as an investment destination. Thank you very much for your time this afternoon. European Chamber of Commerce of the Philippines President Lars Wittig.
Thank you, Jason.
And those are the biggest stories this trading day, September 2, 2021. Catch Business World Live again tomorrow morning, 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.